Hello traders, and welcome to the Market Open Preview, May 7th on a Wednesday, 2014. This educational video is brought to you through FXCL Excellence in Trading. Traders, welcome, and it's great to be with you. My name is William Gilday, and I will be your moderator today. It is a overcast day in Pattaya, Thailand, but it is paradise. Traders, just tell you a little bit about myself. I've been a Forex trader from the year 2006 and 2008 when I retired in the great state of Florida. I came to Thailand and went full-time as a Forex trader, and traders, I've been trading ever since. What a great career it has been, and a challenge and a lot of fun. Traders, I absolutely love what I do. Traders, let's get moving here. I have a lot to discuss today, more than usual, so let's get to the risk disclaimer. Traders, Forex trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in Forex markets and therefore any other instrument you wish to trade. Don't trade with money you cannot afford to lose. Traders, if you are trading with your mortgage or your rent money, please, traders, sit back and rethink what you're doing and trade on a demo account until you can trade the markets comfortably and financially wise. Traders, let's get over to the news calendar. Traders, May 7th news calendar. We had some data come out earlier today. The New Zealand had unemployment change at 0.9 versus 0.6. That was not good news. The Aussie had retail sales in the Asia market today also, and that came out at 0.1 versus 0.4. That reaction was not much, traders. It spiked down, showing Aussie weakness, and pulled back up. I have not looked at that chart since that news release, so I'm not quite sure what it is sitting at right at the moment. Today in the U.S. session, the major high-impact news data today will be U.S. Fed Chairwoman Yellen testifies, and I am sure many will be watching that. Traders, let's go to a new part of our Market Open Preview. And traders, I'm happy to bring to you the recap of yesterday's trade plans. And traders, I will do this even when they don't work, and they're not going to work every day, traders. But I have to tell you, the trade plans yesterday worked absolutely beautiful. If you took the plans and traded your plan, you did okay. All right, let's take a look. Remember, we talked about the pound yen. Traders, this is the 15-minute chart. I don't have time to go through all the charts, but this is a recap. If you look down on the left-hand side of the chart, you'll see a price of 172.33. This is where price was when we were talking about this trade in the Market Open Preview yesterday, and you can see I was looking for a close above the 200 EMA and go long. We were in a range, and that's what the charts were telling us. Traders, what did it do? It absolutely broke the 200 EMA, gave you a tiny little red candle. The next candle was blue. That was your entry, and away you went. What a great trade, traders. It was about 40 plus pips on that trade. Not a bad trade at all. All right, let's go to the next one we did yesterday, and that was the Aussie dollar. This is the 15-minute chart. Again, traders, look to the left of the chart on the bottom of the 200 exponential moving average, which is the green line. And you can see at 0.9271, that is where price was. We had data come out in the session, and you can see where that large spiked candle was on data. That came out, and what happened, traders? The plan was look for a pullback to the 200 EMA, then long. Exactly what had happened. You can see the big red candle after the spike, right down to the 200, almost to the pip. And traders, what did it do? Went long for 60 plus pips. As I put on the chart yesterday, traders, nice uptrend. So what are we looking for today? I would say look for the same thing, and Aussie strength. All right, traders, that was a recap of yesterday's trade plans. Let us go to the charts. All right, the first chart we're going to take a look at today is the dollar Swissy. And traders, we're going to do something different today. We're going to do a correlation simulation today, and what we're going to show you is we're going to show you the U.S. Swissy And the currency pair that is correlated to the US Swissy is the euro dollar. And I'm going to show you how much this actually is correlated most of the time. Nothing is all the time in Forex trading, as we know. All right, so this is the hourly chart. We have a strong bearish trend. You can see where the 200 is at 0.8966. It just continues and continues to go down, and we are looking for short trades, and that is my bias for today. Traders, let's move over to the 1 hour chart. Traders, this is the 1 hour chart. We were able to get a trade plan put in here. You can see where the 200 exponential moving averages, the green line on my chart at 0.8787. And you can see where I had fibbed this, and we are looking to continue the trend to the downside. Traders, this has got to pull back. You can see my white box and then the arrow pointing to the downside. That is where we want a minimum for this to pull back and take this to the short side. Traders, you can see where the X is on the top of the fib, and that would be your stop loss, and that has got to be adhered to. But what do we have as a problem? The problem in this trade, traders, is the Bollinger Bands. The Bollinger Bands are absolutely looking straight eye to eye in each other. They're curled to the inside, and as I put on the chart, ouch. And that is what is going on with the dollar Swissy on the 1 hour chart. Trend continues to be bearish. Traders, look for short trades. All right, traders, let's take a look at the 15-minute chart, and this is our trade plan. Traders, we are in a range here. As you can see on the 15-minute chart, hasn't moved a lot, and we're basically looking for, again, we need this to pull back up, and we need it to come to, you can see where my arrow is, to the downside, to that fib, and we need to take this down. The problem is that the 200 exponential moving average is at 87.57. That is where our stop is going to be. We're going to take this down. You can see at the end of the fib, we're looking for a possible scale out. If you like to scale like I do, I like to scale out my profits and put some pips in the pip bag. And you can see all the way down at the 161.8. That is our take profit area. I would go probably 7 to 8 pips above that area and get out of the trade. All right, that was a dollar Swissy, and that is our trade plan. Traders, let's move over to the euro dollar, traders, and this is the daily chart. And yes, in the center of the chart, it speaks itself. It is just bullish. Bullish, bullish, bullish. Wow. Can we say correlation? Swissy was down big time, and the euro is up big time. Look at the high on this euro daily chart at 1.3965. So this chart was probably taken about 45 minutes ago, and I'm doing this about 4 hours before the London Open. So it's a good chance that our charts could change in price action before the open, and that's okay. All right, so we're looking for bullish candlestick patterns. If you trade the daily chart, I would want this to pull back and then take this to the upside, whether it's to the center Bollinger Band, which is a 20 simple moving average, and take this up. But we'd like to see a pullback if you're trading the daily chart. I don't trade the daily chart, traders, but it is definitely bullish. Okay, let's go over to the euro dollar, and this is the 1 hour chart. And you can see the 1 hour chart is absolutely sideways. However, look at those Bollinger Bands. They were curled straight eye to eye, and now they are open sideways. That is an open Bollinger Band in my opinion. So we have a trade plan on the 1 hour chart. We want this pullback, and you can see where my arrow is. You can see the white box. Anywhere in that white box is acceptable to take this and take it to the upside. You can see where my X is on the bottom of the fib, and that is where our stop is. And traders, if you look left of the chart, you can see that is a significant support level. It's been respected quite a bit, so therefore we want to get out of the trade about 7 to 9 pips before we hit that X and put our pips in the pip bag. Traders, on the bottom of the chart, you can see one word says it all. We are bullish. Let's look for some long trades. Traders, let's go down to the 15-minute chart. All right, this is the 15-minute chart on the euro dollar. I put these two blue range lines in here because it has been in a range. and we want to take this to the long side. So really, when I took the screenshot of the euro dollar, it was really a nice position to go long. However, I'm not really liking that, because if you take a look at 39.35, you are at resistance. Look left of the chart, you can see where prices reacted to this level before. You're looking at 22 pips from the bottom blue line to the top blue line, and minus spread on my side is about 2 pips. So you're looking at 20 pips. 20 pips is fine. You can get to break even and get yourself safe, and no problem. I would rather get the pullback. I would rather see this come back as close to that 200 exponential moving average at 1.3903, maybe to get back to 39.10, 39.12, and we can take this back to the upside, looking for the long trade. Traders, be aware that we are in the range, but most of it, be alert that we are close to resistance, and we want to make sure that we book our profits before we get to resistance, and we are safe at break even, and trade safe, but more than that, trade smart. Traders, until next time, it has been a pleasure to be with you today on a Wednesday, May 7th, 2014. This is brought to you through FXCL, FXCL Excellence in Trading. Traders, trade smart and trade safe, and we'll see you tomorrow before the London Open. Take care, traders, and bye-bye.